So here's something that maybe a lot of people in TikTok will disagree with us, right? Because I
Okay,
don't know
let's
if you've
hear
seen all these videos. They say that rental income is passive income, right? They say, oh, buy this house, 5% down payment, and then, rent it out, and then you will have passive income as a landlord. Is rental income passive income in the eyes of the CRA, or like tax wise? Is it passive income or is that active business income?
So you're opening a whole can of worms on this area. I don't know if you did it on purpose or not, but but I
It's
mean,
not on
I
purpose.
I think in the very basics of this, and if we're just talking about, let's say you have a holding company that owns one
Hmm.
rental property, the rental
Exactly.
property is not it's not where your operating company operates out of. I use the example of
Hmm.
the butcher owning a commercial unit that the butcher operates out of. I'm
Hmm.
not talking about that situation. I'm talking about
Hmm.
a corporation that just owns a residential house and rents it out to some, non-arm's length, non-related people and earns some money on that.
Exactly.
That is
Exactly.
considered passive income in the eyes of the CRA. In the eyes of
Awesome.
TikTok, I don't
Yeah.
think I think people throw out the term passive income very lightly. Um,
Yeah.
I I don't think it's, I know what they're trying to do, where they're trying to get everybody
Hmm.
levered up, take out $1 million loan and
Yeah.
go live on a beach somewhere and just earn $50,000. I
Yeah.
wouldn't advise that to anybody. Go talk to an investment advisor for those kind of decisions. Don't listen to TikTok on that. But but in terms of just the CRA is what we're talking about,
Hmm.
that would
Yeah.
be considered passive income, yes.
Okay.
And actually, just to like further that too, it doesn't necessarily mean how much rental income. So like if you have a house and your rental income is, let's say, $50,000, but that's just
Hmm.
your top line revenue. You're renting it out at $4,100 a month or $4,200 a month gets you to the 50,000 bucks.
Hmm.
Um, that is not what I'm talking about. I'm talking about it has to be profit. So if you own the house that generates
Hmm.
50,000 in sales, but you have a mortgage that has interest, you have property taxes, you have maintenance, you have all these
Hmm.
expenses to run that house, your
Hmm.
income is lower than 50. I'm not talking about revenue, I'm talking about
Yeah.
income.
Yeah. Oh, okay. And because it's considered passive, then it will kind of affect the small business deduction.
Yes. And
Got it.
there's certain ways to change passive income to active income. I don't know if you really want to get into that right
Hmm.
now, but I would say
Okay.
ask your accountant. There are certain rules that the CRA has, how you
Hmm.
can, even if there are corporations out there that just own investment
Hmm.
properties, but they've
Hmm.
managed to turn that into an active business for certain
Hmm.
ways. And it requires employees. There's a few tests involved. I would say speak to an
Hmm.
accountant on that.
Hmm.
But just in the very high level of this podcast, if you're only owning one property that earns $50,000 a year in net
Hmm.
income, then you're putting your small business deduction at risk for sure.
Okay. Perfect. Thank you so much for that